This is the next document that we're going to cover in our short section on financial documents and accounting documents. This is the income statement. Sometimes you might see this called a P&L, which stands for profit and loss. So you might call this a profit and loss statement. I've also seen this called an operating statement. I tell you that so that you know there may be multiple names that this document goes by, but at the end of the day, it's just a way of describing the money that came into the business, the money that went out of the business, and what was left over. And of course, they can be as advanced and as complicated as you want to make them, but they all follow the same general format. We start off by listing the name of the business underneath the title of the document, and then we have some dates here. And if you'll look at the dates, it's January 1 to December 31, so this is for a time period. Unlike the balance sheet, which is a snapshot on one particular day, this is a summary of what happened over a given time period. We typically call that time period an accounting period. It could be a quarter, it could be a month, it could be a year. In this case, it's a year. Every income statement starts off with the same format. They follow the same pattern. They begin by listing the good news, which is the money that your business brought in. We might see this called gross receipts. We may see this called sales. We might see it called revenue. But in any case, we're going to have some measure of the revenue you brought into the business from doing business. It's not uncommon to see this revenue section broken down into different categories. On a farm that sells crops and livestock, you might have a different line for crops and livestock, or different sections for crop and livestock. The next big category you typically see on an income statement is the cost of goods sold. This is a little document inside of a document, and it's a little area where you're going to calculate the value of the items that you sold. You start off with the beginning inventory, and then you add in it the value of the things that you purchased. Again, these are in dollars. These are financial documents, so we're not listing inventory items. We're listing the value of inventory items. And if you add these two things up, you get the cost of goods available for sale. So let's just add those real quick. I'm going to use the auto sum feature and hit the auto sum, hit enter. And what we see happening is that during this year, this farm supply had the ability to sell $140,000 worth of stuff. In other words, they had an inventory valued at $140,000 on hand throughout the year for them to turn around and sell. And then at the end of the year, they went in on the last day and checked their inventory, and they found that their inventory was worth $5,000. So that means that the cost of goods sold is equal to the $140,000 cost of goods available for sale, which was our beginning inventory plus the money we spent on inventory items throughout the year, minus that ending inventory, the money that we have left over. And that gives us the first kind of calculation that's really important here, and that's the cost of goods sold. So we had a $415,000 revenue, and our cost of goods sold was $135,000. So the next thing we're going to calculate is our gross margin. Now, gross seems to be the wrong word right here. I would rather use the word gross on the first line, because gross typically means the money you brought in before any expenses at all were counted. But this word gross has a qualifier. This is the gross margin. Sometimes we see revenue from sales called gross sales, or simply your gross, and then we subtract the cost of goods sold and we get the margin, or the gross margin. So let's do that right now. We're going to type an equal sign. That tells Excel that we're going to be creating a formula. We click on the $415,000 revenue, type a minus to subtract, and then click on the $135,000 cost of goods sold. And we see we've got a margin of $280,000. That means after we paid for the stuff that we sold, we had $280,000 left, which sounds like good news, but there's bad news with that. And that bad news is we had to pay people money. So we had $70,000 in salaries, $40,000 in wages. We had to pay for insurance and advertising and utilities and depreciation and miscellaneous items. And now we're going to take all those up and we're going to total them up. So we're going to type an equal sign and type the word sum, then open parentheses, and click on the 70,000, hold the mouse down and drag all the way down. Learn how to drag. Dragging is your favorite friend when you're working with Microsoft Excel. I let go of the mouse, I close the parenthesis, I hit enter, and I learned that my total operating expenses was $189,000. Now I'm going to calculate my first measure of profit, and that is the profit before taxes. So I type an equal sign, click on my gross margin of $280,000, Then I hit the subtract button, a dash to subtract, and then click on the $189,000 in operating expenses and press enter. And I find that my profit before taxes is $91,500. Then I have a tax expense. And it's not unusual to break the tax expenses out on a different line than the operating expenses because taxes aren't part of your operating expenses. They're a different type of expense. Then I basically just take my taxes and subtract them out. So I'm going to type an equal sign, click on the 91.5, and then subtract the $20,000 in taxes. And I'm left with $71,500 in net income, which is my profit. So this is an income statement, and this is the income right here, stated at the bottom. I want to point out something right here. This double line right here at the bottom of the document, it's a very common accounting convention to, at the end of the document, to draw a double line indicating that you've finished the document and you have your final number. So that is just a basic rundown of what an income statement is and what it looks like. We'll take a look at some examples of some more complicated income statements in the next video. So make sure that you hit subscribe so you don't miss it when I upload it. Thank you so much for watching. Hope you enjoy the video.